Hey, everybody, and welcome back to another episode of Matthew's Monthly Housing Market Minutes. I'm going to change the name eventually, I promise you. Until then, it'll just be a running joke, just between us friends, of course. So it's March 2026 already, the 25th of March 2026. My goodness. And since last month's video, there's been a lot of change in the housing market, the global economy. We're at war now. For how long is to be determined. And my job here is to help us identify what's all this really about and what's it going to do for us? What does it mean for us? So there's a couple quick things that I wanted to cover today. Number one, what's going on with interest rates? Well, you'll see that mortgage interest rates, they did dip below 6% for a short period of time. And then they shot back up to 6.5% on an average 30-year mortgage. Why is that? Well, it's because the 10-year Treasury went up, and the 10-year Treasury is what predominantly controls interest rates. And the 10-year Treasury is the interest rate that the government will pay for other countries, investors, and individuals to invest money in the United States government or buy our debt. And because of the war, there's been so much economic uncertainty in oil prices and things of that nature. Investors, countries, and individuals were a little apprehensive to give or invest money into the United States debt and invest in the United States dollar. So when there's fear, the government has to increase the yield on the 10-year Treasury. In other words, that's the incentivization. That's the incentive that other people get paid to give us their money. And as soon as the 10-year Treasury goes up, mortgage interest rates go up. So keep an eye on that 10-year Treasury. It's been going up. We'll see what happens as the war subsides or we start to have some type of peace talk, whatever that may look like. I haven't watched the news in about 14 years, so I just know macro level what's going on there. Now, that's what's going on with mortgage interest rates, and unfortunately, everybody's being taxed to death at the gas pump as a result of the Strait of Hormuz being closed. However, it appears that we may be working to a peaceful, or for lack of a better term, agreement there. So we'll see. It's too soon to tell. However, if you're wondering why mortgage interest rates just catapulted back up into the mid sixes, that's why. There's a lot of fear and apprehension right now in investing in U.S. debt and the dollar. Now, bigger and better things. An interesting article came across my desk this morning, and I felt it pressing to make this month's video about this topic. So in the Florida housing market within the past, I would say 7 years, since 2019, the cost to insure a property has increased dramatically. And a lot of people don't understand exactly why that is. The why doesn't really matter because it just is what it is now. It is much more expensive to insure properties, condos, single-family homes, etc., in the state of Florida. It really started with a lot of roofing fraud that took place back in 2019, 2020, when there was an unnamed storm that caused a lot of damage to properties in the area, and there was some merit to people getting their roofs replaced as a result of the damage that was caused. However, roofers, these roofing contractors took it upon themselves to go and canvass every neighborhood in the area in which this storm impacted and delude homeowners into thinking that, if you very well may be entitled to get a new roof on your home paid for by your insurance because you may have damage from a storm, an unnamed storm that came through. So they would go on the roof. They would find any indication that the roof had damage as a result of the storm. And if you're reading between the lines, most of the properties that they canvassed didn't. These were roofs that had zero economic life anyways. In the state of Florida, we tend to have about 15 to 18 years of economic life on a roof. I know. But my roofer, Matthew, they told me my roof was warranted for 30 or 50 years. Right. It has a warranty for extenuating circumstances for 30 to 50 years. But for natural causes in Florida, because of the heat, the humidity, the weather conditions we're subjected to, we're lucky to get 18 years out of a roof. Now, there are exceptions to the rule. You can have a roof on a house for 30 years and have no issues. However, their highest economic life expectancy, their optimal rather, is about less than 20 years. So, had roofers canvassing after this storm into all of these neighborhoods, thousands and thousands and thousands and thousands of homeowners assigned their benefits to these roofers for their insurance. The roofers would told the insurance company, because this creased shingle right here, you've got storm damage, you are entitled to a new roof. Then they would charge the insurance company significantly more than the replacement cost of the roof, and they would pocket the difference. So there were then laws put in place that insurance benefits were no longer assignable. And they also, I'm at a loss for words to describe what happened, but they made it to where it was almost impossible to insure a roof that was older than 10 years old when binding a new policy. So while it seemed sexy for all these homeowners to pay their deductible, and in some cases the roofers were paying the deductible, how's that not fraud? Okay. In some situations, there was merit to getting a new roof because you had damage. In most situations, there weren't. So you had thousands of homeowners getting new roofs on a home when it was not warranted. That bankrupted the insurance industry in Florida. So, hey, it's great to get a new roof on your house for the cost of your deductible, or if the roofer paid it in that case. But you don't have the right to complain moving forward when your insurance cost doubles and triples, or you can't get insurance because your roof is older than 10 years old. So that was kind of the impetus for all of the insurance change. Then you had a condo that fell into the earth, and that changed condos and the condo insurance landscape. It's just been a cascade or a perfect storm of events, pun intended. Now, today brings us to the topic at hand. We got this article that says that new rules loosen roof coverage standards. So there's a new federal rule that allows lower cost roof coverage and eases condo standards. This may reduce premiums, but it's going to leave buyers paying more after damage. So what does this mean, Matthew? Well, now there is a rule that has been passed by the federal government, and there's more to come, but this is just the beginning. The new rule essentially says this: up till now, when you get a loan on a home or you bind insurance, the insurance company would cover the full replacement cost of the roof. So regardless of age, you would get the full replacement cost of the roof covered in the insurance, and your insurance premiums would be higher. So in an effort to reduce insurance premiums, now they're offering the actual cash value coverage of the roof at the time it's damaged. So let's say that you've got a 15-year-old roof when you buy your home, and your insurance is already going to be expensive because you have a 15-year-old roof. Let me back up a second. The insurance standards have relaxed a bit since what I just talked about before. However, if you have a roof that's older than 20 years, it's almost impossible for you to get coverage. And if you do get coverage, it's going to be much more expensive. And most of the older roofs are not passing a 4-point inspection, so they're requiring replacements prior to closing. Little disclaimer after the fact. So you buy a home with a 15-year-old roof now. Traditionally, they would want to cover the full replacement cost. Now, it is possible that they will have an actual cash value coverage insurance policy. What does that mean? It means that your insurance policy would be less from the start because they're not bolstering up the coverage for your roof. However, let's say 5 years after you move in, there's some damage done as a result of an act of God or something along those lines, or a hurricane, God forbid, and you file a claim to get your roof replaced. Well, if you have actual cash value coverage on your roof, it will only pay on the actual cash value of the roof at the time of the damage. So if it's a 20-year-old roof, and you see where I'm going, I know, I just saw the light bulb go off. If you see where I'm going, if you have a 20-year-old roof, it's not worth much of anything in Florida at that point. So you would be holding the bag, more or less. Your insurance would cover little to nothing. Yes, your policy would be less expensive, which that's great. But then when you actually needed the insurance and filed a claim, you would get little to nothing because your roof value would be determined. What is the value of the roof at the time the damage occurred? So what does this mean long term? It means that buyers beware, homeowners beware. When you're securing new insurance, I would challenge you to really analyze this. Number one, how old is your roof? Number two, how much more expensive is the coverage for full replacement cost on a roof? Okay, and if it's not significantly more expensive, you may be better off going that direction, unless you're willing to take the risk in the event that there is damage caused and you have to come out of pocket and pay for that roof. So buyer beware, homeowner beware, consumer beware. Just because it's less expensive, this is the whole cost versus price ratio or equation. The price is the one-time exchange of funds for an item, i.e., what your insurance costs you. The cost, or what it costs you up front, that's the price. That's the one-time exchange for value. The cost is, what is it going to cost me over the lifetime of owning this? And if you do an actual cash value coverage on your roof, the cost is going to be dramatically higher if you have an older roof at the time of damage, because you will have to come out of pocket for it. So let me know what questions you have. I hope you guys have an amazing rest of the month of March, and happy Easter, because the next video will come out after Easter. As always, in the entirety of the state of Florida, we would love to be your real estate resource of choice when we can add value to you and yours in any way, even if it's just asking a question. All of our information will be down in the description below. Have an amazing day. We'll see you.